Trading right around $3.43 a share on the New York Stock Exchange, Lithium Americas Corp., NYSE LAC, looks to the average algorithmic scanner and casual retail observer like a bruised, high-risk pre-revenue mining play caught in the structural washout of the post-2023 lithium bear market. Turn on financial television, scroll through retail-heavy forums, or glance at standard broker ratings, and the prevailing narrative is one of exhaustion. Analysts point to depressed spot prices for lithium carbonate, capital burn, and the painful reality of a green transition timeline that has hit speed bumps. Yet this widespread surface-level despair completely misses a monumental structural reality. Lithium Americas is not merely a mining company. It is being forged into a sovereign-grade critical mineral fortress designed to solve the Western world's most acute supply chain bottleneck. While retail investors fixate on quarterly cash burn metrics and short-term commodity troughs, panicking out of positions on mobile brokerage apps whenever spot lithium prices fluctuate, institutional heavyweights, strategic automotive partners, and government-backed entities use these exact windows of low liquidity to quietly accumulate blocks of shares. They aren't looking at next week's options expiration. They are engineering a multi-decade supply chain. The presence of anchor partners like General Motors, whose multi-stage equity investments total nearly $945 million, alongside direct federal structural backing, creates a unique supply-demand dynamic in the float. A substantial portion of future production is already pre-contracted, locking in offtake long before the first commercial truck rolls out of the pit. Think about your own portfolio positioning for a moment. Are you currently holding a core position in critical mineral infrastructure, or are you sitting on the sidelines waiting for the dust to settle entirely, risking that you miss the violent repricing phase when construction milestones convert into operational reality? Let us know your strategy in the comments below. Market dynamics and institutional positioning. To truly understand how Lithium Americas trades day in and day out, you have to look past the superficial price volatility and examine the mechanics of accumulation. With daily trading volumes frequently fluctuating across millions of shares, the stock acts as a classic emotional lightning rod. When macroeconomic jitters hit the broader tech and EV sectors, or when temporary dips in lithium carbonate spot prices make headlines, retail investors flood social media feeds with capitulation posts. Stop losses are triggered, retail liquidity dries up, and weak hands systematically flush their shares into the open market. This is precisely where the institutional playbook activates. While retail traders are getting shaken out by routine intraday drawdowns, institutional heavyweights, strategic automotive partners, and government-backed entities use these exact windows of low liquidity to quietly accumulate blocks of shares. They aren't looking at next week's options expiration. They are engineering a multi-decade supply chain. The presence of anchor partners like General Motors, whose multi-stage equity investments total nearly $945 million, alongside direct federal structural backing, creates a unique supply-demand dynamic in the float. A substantial portion of future production is already pre-contracted, locking in offtake long before the first commercial truck rolls out of the pit. Business model and historical context. To appreciate where Lithium Americas is heading, we must look at how the corporate entity was structurally streamlined. Following its strategic separation from its South American operations, the current incarnation of Lithium Americas Corp. Emerged laser-focused on a single massive objective: developing the Thacker Pass lithium project in Humboldt County, Nevada. Outdated historical framing often lumps LAC into the basket of old-school boom-and-bust junior mining explorers that rely entirely on dilutive equity financing to survive wild commodity cycles. That old paradigm is dead. The modern business model of Lithium Americas is built on a high-growth, vertically integrated chemical processing framework. Rather than simply digging up raw dirt and shipping it abroad for refining, the historical vulnerability of Western mining, Thacker Pass is designed to extract claystone ore and process it on-site into high-purity battery-grade lithium carbonate. The demand vectors driving this business model today are vastly different from the consumer electronics cycles of a decade ago. We are living through an era of multi-trillion-dollar electrification mandates, aggressive corporate net zero targets, and fierce global competition for battery supply dominance. The modern vehicle fleet and stationary grid storage build-out require an unprecedented volume of lithium. By anchoring its operations in the United States, Lithium Americas bypasses the geopolitical friction points and foreign processing monopolies that plague global supply chains, positioning its future revenue streams at the absolute epicenter of the energy transition. Future outlook, catalysts, and risks. Looking toward the horizon, the multi-year growth catalysts for Lithium Americas are tied directly to major construction milestones and production timelines. With initial construction phases advancing and target production windows approaching, every physical milestone achieved at Thacker Pass de-risks the asset and shifts the company from a capital-consuming developer to an industrial cash flow generator. The facility's eventual design capacity, targeted to scale towards tens of thousands of tons of lithium carbonate annually, places the company in the top tier of global producers. However, a rigorous analysis must confront the operational and macroeconomic risks head-on. Developing a multi-billion-dollar mining and processing facility is capital-intensive and complex. The company faces ongoing execution risks, potential construction delays, environmental permitting challenges, and the inherent volatility of global commodity price cycles. Yet looking past this short-term price noise is vital for any serious long-term investor. The structural deficits projected for the lithium market over the next decade remain severe. As global battery cell manufacturing capacity continues to expand exponentially, the scarcity value of Tier 1, geopolitically secure, fully permitted domestic lithium resources will only intensify. Lithium Americas controls an irreplaceable asset backed by sovereign and industrial heavyweights. For those who can see past the immediate cyclical fog, the narrative of Thacker Pass is not about the price of a single commodity today. It is about anchoring the raw material foundation of the next 50 years of industrial history. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly.